during this, the month of August 2017. You, me, we're gonna make it better. We can do that. Talking about getting P.A.I.D, y'all, so let's go to work. Let's keep it tight. Now, for those of you that have your portfolio calendars available, go ahead and open them up for me, please. Please open up your portfolio calendars. And I want you to go ahead and focus on this month, because it's time to focus on the more defensive areas of the market that have historically performed well during this time of the year. Now, U.S. large cap stocks melted to new record highs in July. That's right, last month. And so far in August, the pattern looks set to continue. Right now, as I look at the top 3 major U.S. indexes, got that Dow up 17 points. S&P 500 is down, as well as the NASDAQ. S&P 500 is currently down 0.20%, and that NASDAQ is down 0.26%. However, the risk to investors is indeed rising, with sentiment measures white hot. Investors positioning extreme with very low cash levels and seasonally challenging situations. Now, August through September is historically, listen to me, the worst 2 months of the year for stocks. I repeat, August through September is historically the worst 2 months of the year for stocks. Since 1980, the S&P 500 has fallen 0.1% and 0.7% on average during this time of the year. The only 2 months of the year to show a negative return on average. Now, investors are ill prepared for any kind of downturn. And people are holding their lowest cash allocations since 2000 at a time when stocks are near historic levels of overvaluation. That's eclipsing the cyclical adjusted price to earnings seen headed into the 1929 market crash. We're talking about Great Depression here. But if one is determined to look past all of this and put some money to work, then we would be well advised to focus on the more defensive areas of the market that have historically performed well during this time of the year. So at this particular time, I want to give you 5 positions, 5 stocks that are call options, okay, to get your P.A.I.D during August and part of September. Going to start out first with Nike, symbol NKE, Nike, symbol NKE. Now, thanks to solid earnings, Nike shares are up nearly 18% from their May-June lows, and have now successfully extended over their March highs, as well as the August 2016 high of $59.56. Now, that returns prices to levels that were last seen in April of 2016. Now, a run at the all-time high of $66.95 set in December 2015 looks very, very likely, which would be worth a 10% plus gain from here. Now, especially with management successfully seeing off a challenge by the likes of Under Armour, which has suffered a 66% decline from its late 2015 highs. Now, seasonally, we need to look at what this position has done. And seasonality will kick into gear heading into the fall as back-to-school shopping ramps up and parents shell out for fall sports seasons. We'll also get an update on results on September the 26th. Listen to me, write that down on that portfolio calendar. September the 26th. As analysts are looking for earnings of 49 cents per share on revenues of $9.1 billion. Talking about that Nike. Now, when Nike last reported on June the 30th, earnings of 60 cents per share beat estimates by 10 cents on a 7% rise in Nike brand revenues. Now, analysts recently updated their price target to $68. And this position has moved to a buy rating on the list of many Wall Street analysts. Nike, to get your P.A.I.D during August and the beginning of September. Next position I want to give you is Walmart, symbol WMT. Walmart. Now, Walmart shares are enjoying success amid the general unpleasantness in the retail space. both for specialty retailers as well as big box stores like Target. Now, as the economic data suggests, the U.S. consumer has pulled back. Real disposable income fell off last month for the first time since July. And as a result, retail sales growth has rolled over sharply, slowing to a pace not seen since last summer. Now, this price-sensitive environment is one in which Walmart thrives. Shareholders are responding, pushing shares up and over early June highs near $80 to test above the $81 a share level for the first time since February of 2015. Now, a run at the all-time high of $84.82 set in January of 2015 will be worth a 5% gain from this point. The company will next report, write this down, their their earnings report on August the 17th. August the 17th before the market opens. That's August the 17th, Walmart's next before the market opens. Now, analysts are looking for earnings of $1.07 per share on revenues of $121.96 billion. Now, seasonality is a tailwind with consumer staples. Therefore, this particular position, Walmart, should be considered for inclusion into your portfolio upon completion of the appropriate drill down. Not to mention, Walmart also has several competitive advantages. Walmart continues to perform well between April and November seasonally. Once again, April and November. And don't you forget, Walmart, symbol WMT, next on April the 17th before the market opens. Next position I want to give you is Barrick Gold. Barrick Gold, symbol ABX. Now, gold mining stocks like Barrick Gold are coming back to life, pushing prices back above the 200-day moving average for the first time since April, amid recent weakness in the U.S. dollar. Now, Barrick Gold Corporation, symbol ABX, was mired in a 2-year-long consolidation range, and ABX is breaking out of a smaller 5-month-long trading range and should be good for a run at the February-April highs near $20. Now, that would be worth a near 20% gain from current levels. Now, ABX, write this down on your portfolio calendars, ABX will report their next on October the 25th. October the 25th after the market closes. Once again, ABX, Barrick Gold, October the 25th after the market opens. And analysts are looking for earnings of 19 cents per share on revenues of $2.2 billion. Now, Barrick last reported just recently on July the 26th. And they reported earnings of 22 cents per share, beating estimates by 5 cents. Revenues jumped by 7.4% from last year as management pushed down the all-in sustaining cost of mining to $710 per ounce versus $782 an ounce just a year ago. Barrick Gold, symbol ABX, next October the 25th after the market closes. Next position I want to give you is New Gold. New Gold, symbol NGD. Now, New Gold, symbol NGD, their shares are enjoying the same tailwinds that ABX is enjoying, pushing above its 200-day moving average for the first time since January, in what looks like the beginning of the end of a 2-year-long downtrend from a high of $6.04. Now, a challenge to that level would be worth nearly doubling from here, encouraging traders and investors. And also, seasonal trade tailwinds will tend to move gold prices even higher between late July and early October. Now, NGD will next report, write this down on your portfolio calendars, they will next report their on October the 26th after the market closes. Once again, NGD, talking about that new gold, will report their next on October the 26th after the market closes. Now, analysts are looking for the company to break even on revenues of $183.2 million. Now, when the company last reported on July the 26th, with regards to the ER. Earnings of 2 cents per share beat estimates by a penny on revenue growth of 2.9% from last year. New gold, symbol NGD. Next ER, October the 26th, after the market closes. The next company I want to give you, call option candidate upon completion of the appropriate drill out to get your P.A.I.D, is Golden Star Resources, symbol GSS. That's Golden Star Resources, symbol GSS. Now, GSS shares are a more speculative play, trading below the $1 a share threshold. But they look ready for a run at the February high, which would be worth a near 50% gain from here, to challenge resistance from a 2-year long sideways range. Now, the stock is already well off of its late 2015 low of 14 cents per share. Now, GSS reports earnings of just recently reported earnings of 4 cents per share just a couple of days ago on August the 1st, versus a loss of 8 cents per share in the year ago period, as its cash operating cost per ounce for the first half of the year fell to $791, well below the upper end of prior guidance at $860 per ounce. Now, GSS, once again, is the more speculative play, and they will be having their next ER in November. There you have it, family. We're talking about prime candidates for call options to get your P.A.I.D throughout the month of August and the beginning of September. We're talking about that Golden Star Resources, symbol GSS. We're also talking about that New Gold Inc., symbol NGD. We're talking about that Barrick Gold Corp., symbol ABX. Don't you forget that Walmart store, symbol WMT. And we're talking about Nike, symbol NKE.